You're on mute, my friend.
To me, I swear, Keith, when we're on, when that intro video is over, this thing is set up to where it's supposed to automatically unmute itself, and it didn't. But good morning, everybody. I want to start this thing off with some very, very important news. So let me add my screen here. For those of you that don't know, that good-looking gentleman to my right is Keith from Crypto Bullseye, and excited to have him here again today. And before we get rolling, I want to mention, folks, that this is his YouTube channel here, and we're super, super proud of him. He broke 10,000 subscribers not too long ago, and I don't know if you can see it on your screen, but he's already up to 10,400 plus subscribers. And the easiest way, if you're not already subscribed to Keith's channel, to get there is just click in the description of this video that you're watching right now. And right here, you can join the Crypto Bullseye family. This link here will take you right to his website. This link here will take you so you can follow him on Twitter. And then probably most importantly, in a lot of ways, you're going to want to join this gentleman's Discord channel, because the way that he interacts with his community is just absolutely amazing, above and beyond. I think that you will find that his community loves him more than just about anybody's community loves an influencer that I've ever seen. And it's because he delivers extraordinary value. So I don't want to make you blush, Keith, but I just want to make sure that everybody watching this video got all of this information in the first 30 seconds. And so welcome, my friend. Good to see you again. How you been?
I'm always good, Brad. And it's great to see you again. And you give the best introductions ever. That should be just a job of yours, introductions.
Thank you. Thank you. I appreciate that, man. I appreciate that very much.
No, but I think just on the 10,000 subscribers, a big thank you from the bottom of my heart to everyone that does support me, because it is something that I do try and take time out of myself, out of my own kind of busy lifestyle, to be able to add this value and provide value, but more importantly, kind of have a community with shared values and a kind of friendship of like-minded people. Because early on, when was it, 3.5 years ago, when I started the crypto channel, there was nobody in the UK that did crypto. We're so far behind as far as the crypto space is concerned around the rest of the world. And we're supposed to be innovators, and we're definitely not innovators. And one thing that I've managed on the back of this is not just meet new friends all around the world, but meet new people within exactly the same position that I am from within the UK. So yeah, I am blessed, and thank you all for following me, guys.
Yeah. And, you know, one of the things that you do, and one of the reasons that I feel like you're having such extraordinary success and your channel is really growing, is because you really do care about your community, and you really ask your community, hey, what do you guys want? That's one of the reasons that I recommend the Discord channel, is because you're always asking your community, hey, what videos would you like to see next? Yeah. You know, you do a poll. Hey, would you guys like to see, you know, a video on airdrops? Would you like to see a video on, you know, creating passive income? Would you like to see a video on day trading? You know, you'll give your viewers about 4 different options. And one of the things that I really like about you, Keith, is that you're open to making the content that your community wants to see. You're not just one of those guys. It's like, hey, I'm interested in XRP, so I'm going to do 27 XRP videos, whether everybody's sick and tired of XRP. Like, if your community says, hey, we're tired of XRP, we want to see some, you know, Cardano videos, then you're going to make Cardano videos. So you do an amazing job of really curating your content to what your community is really interested in. So kudos. Appreciate
Thank you,
that.
my friend. Thank you, sir. Thank you.
So the $1 million question, I got your chart pulled up here. You know, the last couple of days could have been a little unsettling for some folks, especially people that are newer to crypto. You know, for some of us people, like you've been around, you said, for 3.5 years. So you've seen enough of these retracements, you know, to where they don't freak you out anymore. I usually end up having 2 or 3 people message me with like, the sky is falling. Like, what's going on? Should I sell everything I own? Are we going to zero? And I'm like, what are you talking about? And they're like, oh, well, Bitcoin dropped all the way down, to 109 yesterday. And I'm like, oh, I didn't even notice. Like, it wasn't even a blip on my radar screen, because I've seen 10, 20% retracements dozens and dozens and dozens of times over the years, to where it's just like a normal part of crypto. But I'm sure that everybody here would love to hear your thoughts on the charts.
Sure, let's do a deep dive. It's good to do
Yeah.
a deep dive every now and then, but it's quite interesting you say that though, Brad, because the first thing that we said when we spoke a minute ago was about what happened on the charts, and the first thing that I said was I haven't even looked at it today,
Right.
so
Yeah.
so it doesn't phase us as much anymore, does it, mate? But new people that are
No.
into crypto, it is volatile.
Before you dive all the way into it, I'm curious. I want to add one caveat or one question. Do you think that there was any catalyst, any type of news or any catalyst that caused this, or is it just kind of part of the normal what goes up? We've seen Bitcoin, go up dramatically over the last few weeks for the most part, must come down.
There was a massive sell-off, wasn't there, of let me find out how much it was worth.
Was there any news? Do you think it's maybe just the people that like to manipulate?
Oh yeah, 24,000 Bitcoin. So they sold 24,000 Bitcoin was sold. So Bitcoin crashed on the back of that. But when you look at what happened to, say, Ethereum against Bitcoin, it like barely budged. And when you look at, and this is the important thing, and we'll have a touch on this very shortly, but this is the important one, and this is the others chart against Bitcoin. Now, so this is the crypto market cap outside of the top 10. So this is excluding your Solanas, excluding your XRPs, excluding your Cardanos. This is the high risk against the big daddy Bitcoin, which is the biggest market cap by a million miles, against these collectively. And you can see this is what effect it had. We broke the 200 daily moving average. This was the big drop. And then look at the recovery. It's barely touched it. So as far as the drop was concerned, Bitcoin got hit hard. We'd said there was 27,000 Bitcoin that was sold. I ask you this question. The person that sold 27,000 Bitcoin, were they trying to go down the risk curve to buy something less risky, more risky, with more gains, because that's the time of the cycle that we're in, and potentially going into something like Ethereum, or potentially going into something like Solana? So are they coming out of Bitcoin and going further down the risk curve as we speak? Because this chart here is telling a story that although that Bitcoin got hit, what happens when Bitcoin gets hit 5%, altcoins get hit 15, 20%, Bitcoin got hit, altcoins didn't get hit as much. So what it's saying is there's confidence in the market now, and that's a sign of retail. I don't know about you, Brad, but have you seen a lot more comments and interaction in the YouTube comments of late? It shows a sign of firstly, you get increased views, but secondly, increased interaction with people that are coming new into the space. So I'm starting to see the retail come now. It's nothing like 2021. We're not yet there yet. And when we are there, you know exactly what will happen. It'll be Coinbase, next thing, someone else will be doing something, and then there'll be positive for the weeks and weeks and weeks kind of thing until the end of the run. So we're not there yet, and that's because there's not enough retail news. I mean, let me tell you a little story actually about 2021. I remember going into the London Underground, and in 2021 it said "Miss Dogecoin by Floki," and it had signs all over the place. And this is something that's pretty much frowned on and banned nearly in the UK. And they had these advertisements in 2021, and I go frequently to the underground station. I haven't seen anything there yet. And that's a sign to me as well that we haven't got the retail in yet. They're starting to come in and they're starting to flow in, but they're not there big yet. We haven't had that big, massive pump and that big, massive surge. And we'll have a look at dominance very shortly. But this is an interesting chart just to answer your question, that this is how scared people are in comparison to how scared they would be normally when Bitcoin has a drop like this. So not that scared. You can see this goes back here. How long is this?
Yep.
Going back. This goes back 12 days. So if we go back 12 days on the others against Bitcoin chart.
Yeah, I agree with what you're saying 100%. I had two longs in on an exchange at 10x leverage.
Yeah.
Way back when Bitcoin was all the way up at probably 117 or so. And neither one of them got liquidated. They're both down probably 50, 60%, but neither one of them got liquidated. And normally a move from 117 all the way down to, to 109 would probably cause altcoins to drop 10, 20, 30%. And these guys didn't even drop 10%, so that's a sign that I think that what you're saying is very true, is that I think we're getting pretty darn close to altcoin season, is what I think I hear you saying.
Yeah, and I think it'll be faster and harder as well. I mean, Bitcoin, it's lost its 50 period, it's lost its 20 period moving average. So, I mean, it could come back and test these, but I can see a bit of stagnation for the next couple of weeks with Bitcoin. And that's a good thing because it allows the altcoins time to start catching up. And if I'm honest, and we look at Bitcoin, and we've talked about this before, and it's something that I've been saying for years now, not just the last few weeks, not just the last few months. This is something I've been saying for years now. And this was the previous cycles. And I don't want to dwell on it too much, Brad, because we've talked about it before. But we had on the weekly, we had exactly 152 weeks for a bull market, and 52 weeks for the bear market, 152 weeks, I should say the collective accumulation phase and the bull market from the low to the top, that is 152 weeks, and then 52 weeks in the bear market. And then this would give us, when you go back to the daily now, this would give us, what are we on? 49 days left. But this is for Bitcoin. Does that look probable to you, 49 days left? I mean, it's not going to be exactly 49 days left. It's 100% not going to be exactly 49 days left, because nothing plays out exactly the same. Although weirdly it has here, weirdly it has here, weirdly it has here. Doesn't mean it's not going to play out, but you just can't bank on it. But if Bitcoin does top out in around 49 days, in around the next, 1 month to 2 months kind of thing, if Bitcoin does top out, does that mean that altcoins are going to kind of have any kind of rotation in the surge after Bitcoin? Like here, just as an example, where are we? 2017, you've got Bitcoin here, 2017. So Bitcoin, December 2017, all-time high, bear market, crash. And then you look at Ethereum. What's this? Yeah, you've got Ethereum, tops out 2018, bear market, crash. January 2018, this 4 months later. Could something like that happen? I don't know. I'm just asking. That's something that could happen. It's something that we could prepare for. So ultimately, if Bitcoin ends its cycle, do we get any kind of a parabolic run at the end of Bitcoin's cycle? Potentially, who knows? It's something to watch, though. Right. So this is the important thing as well that I did want to discuss on Bitcoin, because this is the resistance point, which we expected to flip as support. And this has been on here for a long time now. And this was the previous high. That was a reaction. We broke through there. We got a full-bodied candle, which completely breached the previous high. That gives us our range here. We come back. We tested this area exactly. This gives us our range. Now, this is the concerning thing. We're dropping this range now. And you can see what this candle's done. If we just focus on this candle here today, this is the daily candle, indecision. So you can see at some point during the day, this candle has gone all the way up here and the bulls are winning. And it's been all the way down here and the bears are winning. And it's ended up in the middle where it's undecided. What often happens there is you get something like this, indecision, another indecision candle, and then push. Once you take out this high here, then you expect another push to the upside and another turn for the bulls. So you can see that we're getting a reaction from there. And that's the reason why we're getting a reaction from there. And that's the reason why these trend lines and these zone areas hold up perfectly. You can see that's where the fight is. That's where the tug of war battle is happening here. Trying to hold this level to the T, 109,696. So it's going to be interesting. What we've got 7 hours and 30 until the end of the day before this candle closes. If we hold that, then expect indecision or a continuation where we might try and break this 110,000. If we break 110,000, you'd expect to come back and test this previous low here, which is 112,000. That could take a few days to play out. And if that does take a few days to play out, then you need to look at the altcoins. What are they doing? Are they going to gain some kind of momentum whilst that is in stagnation phase? Because ultimately, we don't care if Bitcoin slows down now. I mean, one thing that I'd said on my channel was about 6 weeks ago now, Brad, I done a video and I said half price Bitcoin and people called me nuts. and they didn't understand the concept. And what I was trying to tell people was, if you want a half price Bitcoin, it was 106,000, 53,000, the equivalent of 53,000. If you want a half price Bitcoin, the only way that you can do it within crypto is go further down the risk curve. And the time to go down the risk curve, without actually giving any financial advice, based on the analysis, was around here, once we'd put in a higher low and once we'd taken out this area. So at this point, Brad, I'd done a video and I'd said 0.02302. If you bought Ethereum, the second least risky asset within the whole of the crypto space, and Ethereum comes up here, which we expected it to do at 0.0460, that is the equivalent of you buying Bitcoin at 53,000, or ultimately, what is it now? 109,000, half of that, 44,500. So the equivalent of that. So basically, the reason why I'm saying this is because we talk about the risk curve a lot, and people don't understand the concept of getting a half price Bitcoin within the least risky way within the crypto space, looking at the charts, telling us something that's likely to happen going forward, because this had happened before, this had happened before, and this had happened before. We expected it to happen to now because the narrative was given us that. It was given us that signal. So people say to me, is it too late now for Ethereum? I say to them, yes, it is too late for Ethereum. However, Ethereum's the second least risky asset. Then you can go further down the risk curve, but you need to understand that it is more risky. So you can look at something like, and I haven't done this yet, just for an example, let's bring up ADA Bitcoin. Not much further down the risk curve, but a little bit further down the risk curve. So what would you need to get a half price Bitcoin now if you wanted to buy Cardano? Because it's too late with Ethereum. That's pretty much dead. You would need it to come up to here. You'd need it to come up to here. 100% against its Bitcoin pair. So can you see, that's just a little move that coincides with that lower high there. So if you wanted a half price Bitcoin today by going through the risk curve, but understanding that this is further down the risk curve than Ethereum, you can still do it using Cardano as an example. Wait until it's 0.00001535 Satoshis, and then you rebuy Bitcoin with your Cardano, and that is effectively you getting a half price Bitcoin. So you just need to understand that as other people, i.e. the smart money, the people that are driving the market, go down the risk curve, and this thing that we've been talking about for a long time, for months, for years now, we need to understand that the only way that you can get these gains collectively by getting the thing that everybody wants, which is Bitcoin that's already run, is going further down the risk curve yourself. Further down the risk curve you go, the higher the risk it is. As you get through parabolic, then it becomes stupid because you start getting emotions involved, because things start going parabolic in a short amount of time. You think it's going to go to the moon, and then ultimately the same thing happens on the way down. So that's just a little example, just using how we can go further down the risk curve using Satoshis rather than dollars. But it's going to be interesting to see whether this one closes on the day.
Yeah, makes a lot of sense. So would your strategy be to buy these little bit higher on risk assets, as you call it, to get the half price Bitcoin? And then when they do what they're supposed to do, are you then funneling those funds actually into Bitcoin in order to maximize the bag of Bitcoin that you have? Or is that more of just like a metaphor for how to maximize your profit overall?
Yeah, definitely 100% a metaphor, because ultimately, Brad, we were here when Bitcoin was 15,500. We were here when Bitcoin was 20,000. We were here when Bitcoin was 30,000. New people that are coming into the space, they're here when Bitcoin's at 109,000, 110,000, 120,000. So ultimately, them going out and buying Bitcoin at 120,000 or buying an allocation of Bitcoin at 120,000, they didn't get to take the advantage that myself, that you, and other people that have been in the space for a while got to get Bitcoin at those low levels. So if they're looking to collectively stack Bitcoin and that's their strategy, that's just one way of doing it, by going into another asset further down the risk curve for a short amount of time, putting that asset, once you've sold it, once it's hit your level, into Bitcoin. And that's depending on whatever kind of percentage that you're going with. If it's 100%, if you're looking for a 2x half price, that's your strategy. But ultimately it's just a way of gathering Bitcoin. It's a strategy of gathering Bitcoin. Is it something that I'm looking to do to a certain extent, towards the end of the bull run, or towards the end of our long expected alt season, I will be allocating a certain amount of it into Bitcoin. So to a certain extent, that will be something that applies to me, but it's not a specific strategy that I'm going out to do. It's just trying to demonstrate to the new people that this is other things that you can do. You don't have to pay this price for Bitcoin, but if it's Satoshis that you want to bag, there's other ways around it by going further down the risk curve for a short period of time at the right time to be able to do that.
Okay. Makes sense.
It is just risk management, isn't it, at the end of the day, Brad?
Yeah, for sure. I love that concept so much. In fact, I just changed the title of the video while you were talking about it because I think that that's an important concept. And folks, I recommend that you go over to Crypto Bullseye's channel and find that video where he talks about getting half price Bitcoin, because he really goes into a in-depth explanation on it, but it's still only probably about an 8-minute video. So I definitely highly recommend, for those of you that were listening to him right now and maybe didn't totally understand what he was saying, go watch that video. And then I've got a question for you, Keith. It's slightly off topic, but I think anybody that does some trading, especially leverage trading, might be wondering this too, and I think that, there's definitely, I have a little bit of ignorance in some ways when it comes to this. So I'm looking forward to hearing your answer. When you're trading with leverage, my impression was that I was trading against the other traders. So in other words, if I place, say, a 10x leverage trade on Bitcoin at 109 and I'm right and it goes up, I'm making money. In order for that to happen, there has to be other people that were betting that Bitcoin was going to go down or were shorting Bitcoin. But my question is we see so often, like they call it stop loss hunting. We see so often where we will see a wick or we'll see something happen where I've had multiple positions that I didn't have a stop loss on or I didn't have backed up. Well, like, let's just call it, Bitcoin. Say my stop, say my liquidation was I made the trade at 109. That would give me about, call it $10,000 worth of room. So call it 99 is my liquidation. Many, many times I've seen Bitcoin come down to like 101, 102. And then boom, all of a sudden it drops down to 99 in a fraction of a second or very, very quickly. Yeah. But then before you know it, it's right back up to 102, 103. And so my ultimate question is, do the exchanges themselves benefit from those liquidations? In other words, are we not only competing against other traders, but are we also do we got to be worried about the exchanges, and are they making money when we get liquidated?
Well, the exchanges are making money on fees, and that's where they ultimately make their money. But it's quite a tough question, and to be honest with you, I wouldn't like to answer it because I'm not 100% sure. But I mean, I have my thoughts on it, Brad, and my thoughts on it, that I think there's probably good ones and there's probably bad ones. And the reason why I say that is because I used to trade a lot on FTX, and although that my actual loss on FTX, Brad, was like $20 in the end, my brother lost a lot. My brother lost a lot, sorry, on FTX. But I'd kind of seen something in the background when I was trading on FTX, and I'd noticed it was mainly Solana coins. And they were really heavy on Solana coins, really invested in Solana. And I'd seen that there was these stupid liquidation up to the upside, liquidation wicks to the upside and to the downside, back to the upside and to the downside. And usually when that happens, it shows a sign that there's low liquidity in there. But then I was looking in there and it was high liquidity in there. So I thought, right, okay, what's going on? And I was looking at that and comparing it against other leverage perps charts and then other spot charts, and I'd seen that those wicks weren't actually on there. So to see it not on a spot chart, that's one thing, because it does happen a lot more on these leverage trading sites. But to see the difference between what FTX was saying and what the rest of the other perps were saying, then it showed me that there was kind of manipulation going on there. So I looked at it and I thought that there was bad players or there was bad actors going in there, and it turned out that they were just trading crazy on there themselves. And well, everybody knows what happened in the background there, but it was just massively irresponsible. But I could kind of see that, and I got my money out of there, and that was one of the reasons why I got my money out of there, because I could kind of see manipulation in the background. And I was quite fortunate that I was one of the ones that did, because a lot of people lost out on that. But I think that, I mean, I do have my suspicions, and I do see these liquidation wicks quite a lot that are not on spot charts, is all I'll say. And when you're talking an exchange, and I think this is probably one thing, is when you're talking an exchange that can allow 100x, 200x, that creates an imbalance with within the liquidity pool between longs and shorts quite a lot, and it can create quite a big imbalance. When you've got leverage exchanges that will do kind of maximum 20x, that creates less of an imbalance. And if you can think of 1 million people doing 200x longs and 500,000 people doing 200x shorts, that's a massive imbalance, and the exchange can't cope with that imbalance. So you'd like to think that, how does the actual exchange deal with it? I don't know what the answer is, but they would have to deal with it somehow, and that kind of makes me a little bit suspicious as well. So it's probably a rubbish answer, to be honest with you, because I was sitting on the fence a little bit, but I've got my suspicions with some, and ultimately I don't know.
I think you just brought up exactly kind of what I was thinking about, and that's an incredible point. And, you know, being from Las Vegas, we'll hear about this all the time, like where there's a football game, where the casinos are definitely rooting for a specific outcome, because for whatever reason, and, you know, a higher amount of money came in on one team. So if, you know, if the Pittsburgh Steelers win, the casinos are going to lose several $1 million. If Pittsburgh loses, the casinos are going to win millions of dollars. The thing about that is the casinos don't have any control, and they can kind of withstand the losses. If they have a bad week, no big deal. They get it back the next week. But that's exactly what I was kind of thinking in the background, like what you just said. If you've got an exorbitant amount of money going in on longs, and there's only a fraction of as many shorts, then, like you said, the exposure that the casino, or in this case the exchange, would have could be kind of scary for the exchanges. And I'm with you. I don't know how they deal with that, but they gotta do something to protect themselves. So interesting. I agree. It's probably not to either one of our benefits to talk about it too much on camera live, because overall, guys, don't get us wrong. I mean, there's a lot of great exchanges out there, and in order for Keith and I to do what we do, there's several of them that we use. So we're definitely not pointing the finger at any, you know, particular exchanges or saying that anything funny is going on, but it was just kind of a weird thought that I had, and I wanted to, you know, get Keith's opinion on it. But I'm kind of curious, Keith. We're looking at right now, you know, Bitcoin sitting at, you know, at least on CoinGecko, it's sitting here at like 109,742. What do you think are the key points of resistance at this point? Like, if Bitcoin breaks to the downside, where's the next stop? And what would you need to see Bitcoin do on the upside? Like, I think I heard yesterday, I don't remember where, but like 111,000 was kind of a key area, that if we could break up above and hold above 111-ish, there's a reasonable possibility that we could see more upside. And same thing, you know, to the downside. Like, if we break through this 109, that we could be seeing, you know, 105 or 103. What are you looking for? This channel that we're in now, what are you looking for as far as the breakouts on the up and downside?
So yeah, you are completely right as far as the upside is concerned. If we get a break just above 111,968, call it 112,000, then you could see further upside, and you can see that because of this this previous support here, Brad. Just get it up. This previous support here, where we bounced once, we bounced twice, we've dropped through there. That is, rather than an RS flip, that's an SR flip. So this is going to be your first resistance point at the 112,000. So if we break above 112,000, potentially you can see a little bit of chop or a continuation higher. But one thing is, you've got your 50 and your 20 daily moving average here. What happens often when you're coming up to trying to reclaim these levels, you'll get the chop and you'll get the chop and you'll get the chop until you've got enough momentum to be able to break through these. So you often see, when you see here, look, how the price just chops and chops and chops when you're at these levels here. So if we do get that break to the upside that you just mentioned, expect it to be a few days of chop. And if we get that few days of chop, it could be good for altcoins, but let's just monitor that and see. But as far as the downside is concerned, we've got this resistance band, or this previous resistance, which is support here. That's quite a big level. Look at how price reacted to this: resistance, 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 support. So that's all the way at 105,671. And then we've also got this barrier here, 101,272. For this move to be invalidated, for this swing to be invalidated, and for us to really see a swing to the downside, you've got your 200 daily moving average at 100,000. You've got this low here at 98,166. That would be a volatile swing. It'd take a lot to take Bitcoin down there. And to be honest with you, if Bitcoin went down there, I would expect altcoins to follow as well. It's all well and good when Bitcoin's making 10% drops and altcoins are making 5% drops, or Bitcoin's going up 5% and altcoins are going up 10%. But when Bitcoin's got a lot of fear behind it, and that would have a lot of fear behind it, then that would have a knock-on effect with altcoins. When is the whole bull market invalidated as far as Bitcoin is concerned? That's the $20 million question. That is this 74,691, and breaking a close below there. And from where price action is now, that is all the way down 31% to the downside. That would be a horrible journey all the way down just to try and get confirmation that we're not in a market anymore. So it's a thing that we need to monitor, and these are the first key areas that we need to bounce from. I do see 100,000 being a strong support bounce. And look at this. This has just got, it's like a magnet for price. Support, resistance, support, resistance. So expect that to be support there. And then that gives you your zone, that gives you your range.
Okay. So for some of the newer, less experienced traders, when you say that we get up, say, to 112, that we could be getting positioned for some more upside, one of the things that I ask a lot of questions that I want to know the answers to. So, but I think a lot of people might wonder about this. Just because all of a sudden it's at 112, that doesn't mean that we should probably just go crazy longing Bitcoin, right? How long, my question is, how long do you want to see it hold above 112 before you start to get optimistic that more upside is coming? In other words, I don't think a lot of people understand like the daily candle close and those types of things. So how long do you want to see it up above 112? Do you want to see it up above 112 for 15 minutes, an hour, 4 hours, 2 days? In general, when it does break a resistance trend line, how long do you want to see it stay above that? Because we've all seen situations where it'll go up to 112, maybe even run up to 112.5, 112.6, 112.7, and then come all the way back down to, 110. So At what point in time, how long does it need to stay above a resistance or below a resistance before you believe it's going to continue in that direction?
Yeah, let's go hypothetical then. Excuse me. So this is good actually, because we're talking individual candlesticks, and this is what I love. So as far as how long is it going to take for it to break and close, well, that is the clue, the close. So we're on the daily chart here. I'd want this candle to have a close above the area that we mentioned, 112,000 on the day. So we've got 7 hours and 10 left today. It's not going to happen today. If we got a full body candle tomorrow that broke above 112,000, that'd be good enough for me. And then what you're likely to expect, Brad, the following day is the bears to come back down and test this candle by 50%. And then you're either going to see it push to the upside, or you're going to see it hold. And within a smaller time frame, that would create a flag pattern doesn't look like a flag pattern there, but within a
Yeah.
smaller time frame, that would create a flag pattern. And that's
Okay.
just it gearing up for the next move. So you can read a lot from candlesticks, and it is an interesting point because this candle, if this hypothetical candle, if it happened, would be what's called a 3-bar reversal. And what that is you've got this big, nasty, bearish candle to the downside, which is nearly a full-bodied candle. We had the extreme all the way down here at 109,300, and then the bulls pushed it all the way back down at the candle close, 110,000. And for anyone that's new here, just to let you know, when you've got a red candle, you've got a body, and then you've got a body to the downside, and then you've got these things here, which are called wicks. So anyone that's new that doesn't understand what these things are, what that represents is the extreme high of the day and the extreme low of the day. That tells a story of where the bulls and bears manage, the bulls or the bears manage to close at the end of the day. So the bears pushed all the way down. The bulls had limited control here. That was met by indecision. So we're looking for clues now, and the clues that we're looking for is a 3-bar reversal. And this hypothetical one here would show one thing. The bears have pushed price down. We've talked about why that's an indecision candle. And then that's pushed price up above the extreme of the previous high. That's including the wick. And that's showing that the bulls have regained control in the short term. So that's just reading an individual candlestick body. And you can see that coincides with this previous resistance level. So it is a high probability. It'd be interesting to come back and revisit this to find out if this actually happened, if we do get a move to the upside. But ultimately, I think that we'll continue to just be slow on Bitcoin for a while now. I think it'll be a slow grind, but hopefully we'll get confidence in the market that the rest of the market can actually run whilst we're in a slow grind. Because this has been a long time now. This has been, people don't appreciate this. And I'll tell you something, Brad, people are not talking about Bitcoin anymore, are they? 47 days. People are not talking about Bitcoin. People talk about other cryptos now. And that's because of that. It's been in there for such a long period of time, but they don't understand what's like Ethereum done during that time. Bam, all-time highs. What's the dollar done? Bam, smash to the downside. What's dominance done? Bam. All these metrics that we've been waiting for and we've been talking about for such a long period of time, showing us that while Bitcoin's slowing down, the rest of the market's heating up. So, I mean, this is one of the reasons why it doesn't concern me too much. It's good to look at Bitcoin in the short term. It will always be the big daddy, and it is always going to be the market leader as far as narrative's concerned. If it does get hit hard, yeah, everything else is going to get hit harder. But as far as letting the cycle play out is concerned, whilst we're slowing down on Bitcoin, this is what happens. Bitcoin's had its run. It's had 3 years of going up. Now it's time for Bitcoin to slow down and let everything else catch up for a short period of time. That's where the market cycle catches you out, because it is a short period of time. And if you think about, what did we get last time, Brad? Was it about 4 billion as far as the, let's have a look, actually. Let's have a look at the total. Let's have a look at the total, see what it was before. Don't look at this chart very often. So in 2021, we were at 3 trillion. So we topped out at 3 trillion. That's everything, including Bitcoin, everything including Ethereum as well. So we topped out at 3 trillion. But during this point here, when we were topping out and everything was going flying, we look at Bitcoin during this point, had this choppiness where Bitcoin slowed down. I'm winging this here, Brad, I'm winging this. Where Bitcoin slowed down, slow grind, boring grind. Look what it's doing now. When we get there, slow grind, boring grind, whilst we know that last cycle, altcoins went parabolic during that time. So I think that we are going to get a bit more of a grind on Bitcoin, and I don't think that Bitcoin should be the first thing that we look at, but I don't think it should be the main thing that we'd be looking at the moment.
Right. Okay. So for some of our viewers that maybe don't have any leverage trades going, this isn't financial advice, but are you staying away from creating any new trades? Or the reason I ask is I'm looking at CoinGecko on my other screen, and some of the tokens that we've been talking about over the last few weeks, like Polkadot, $3.83, ICP down at around $5, Atom token well under $5, Polygon Matic 24 cents. Are there any altcoins that, if you didn't have any trades in play yet, that you might recommend our viewers to at least go take a look at and at least put on their radar and potentially maybe jump into some of these tokens with a 3x leverage, or what? Or are you just totally staying away from the market until you get more confirmation as to the direction that we're headed?
And I'm personally quite comfortable with the direction, and as far as the bias is concerned with the market, until it tells me anything different. So I'm not too concerned at the moment, but we can go over some. I'll tell you one good one to get into yesterday, crypto.com.
Okay, so what, the CRO token?
Yeah, yesterday that is. Not financial advice. Go and look at that yesterday. Let's have a look.
Ah, okay, yeah, that would have been a good one.
Let's have a look.
20, 24, 25.
Oh, look at that. Oh, look at this. See, isn't this nice? Look, I haven't done this for months and months and months, but look at how these lines are respected when you're doing analysis and you're going forward, and look at how these levels are respected. Haven't done this for such a long time, but we expected that to be a resistance. We said that was going to be a resistance. That was the area to break out. Got your flag, got your breakout, bam, little resistance all the way up here. So it's interesting to look at that actually, because I haven't done this one for a while. But yeah, that's absolutely flying. What's it done today? To its highs, 40%, to where it is now, 31%. That's a nice hindsight one. Let's have a look at some of the ones. Right, okay. Well, you mentioned Polkadot, Brad. So Polkadot, it's quite interesting because I was looking at Polkadot and I said, we expected a rejection. Excuse me. We expected a rejection here, the 200 moving average. Managed to break above the 200 moving average. That was bullish. However, we got a signal that we were getting overbought here. So we got a pullback, and I was hoping we'd hold this level of support here between 391 and 388, and we've fallen through there, and this is going to be the next resistance barrier now that we need to overcome on DOT. But when you look at it and zoom out and you say, right, okay, you got 1, you got 2, you got 3, you got 4 touches of this trend line here. You're near the bottom of the trend line, and this is still holding at the moment as the stochastic and the indicators are coming down. One thing that we've still got on DOT, you look at this on the weekly as well. Oh, better off on the 3-day actually. On the 3-day daily, you've got this massive divergence that goes on for such a long period of time. Like, you rarely see these. And this is quite a good topic actually, because in my Discord group I call Dot the Marmite token, because people love it and people hate it. And I tell you what, there's so much hate in the comments and there's so much love in the comments for this one, and people have just completely been ground down by the thing. And people are saying nobody's buying, nobody's buying, nobody's buying. But quite funnily, when I look at the RSI, which is a measurement of buying and selling pressure, it's telling me the opposite for 3rd of August 2024. This figure's been in a bullish divergence. That's a huge range. So people that are saying it's not, people are not buying, people are not buying, or why is the RSI telling us that they are? That's quite an interesting one. That is the Marmite token. Let us know in the comments, guys, which side of the fence you're sitting on with Polkadot. But I don't mind that. Do you know what? $3.71. $3.71 is not a bad entry. This is quite an interesting thing, because we talked about individual candlesticks, and I said one thing that you can expect is a 50% retrace of the previous candle, and this is going to be a good area for this to fall back on here, which is going to be, I don't usually use the 0.5, but it's good just to see 0.5 here is a likely area, $3.91, where this candle is actually probably going to close today. And that's quite often happens where you get full body candle to the downside and a 50% candle to the upside. So be interesting to see that. Doesn't look too bad. From a 10x perspective, probably not interested, because the way that I like to play these when you're in a range and you're waiting for a breakout, the way that I like to play these is you dip your toe in the water at support, If the stochastic is overbought, when you get to the top here, that's signaling that you're likely to get rejected at this area. We had the 200 moving average. That was going to be a big rejection point. You got top of the trend. Look where it ended up, top of the trend. So you knew that that was going to be a resistance point. So taking chips off the table at this point within the trade, and then wait in until you hit the support level, indicators reset, another push to the upside. Then you need to look and you need to assess and you need to analyze. Are you likely to get some resistance at this point? Indicators overbought. 200 moving average again, likely to get a pullback. So you can rinse and repeat whilst you're in a range waiting for the breakout. And what you've managed to do is accumulate into profit within a range. And once you've got the breakout, that's the sign that you've got momentum. So once you've got the breakout, you've got your retest, which you often get, confirms that level. Once you get that, that's when I like to go, when you've got a directional bias higher. And one thing that you can do at that point, because you built a trade in this position here, is you could put your stop loss at break even, and your break even point could often be below this low here, below this low here, which ultimately, if this thing reversed all the way down here, we're wrong. And then you want to be out. And then if you're out with no capital on the table, i.e. a risk-free trade, then that's the best thing possible. Understand and know exactly where you're going to be wrong, and where you're going to be wrong, you want to be out. Because it is a game of probabilities at the end of the day. Who knows what the market's going to do? Who knows what whoever's going to say tomorrow? Who knows what is going to happen that's going to create an interest rate cut or an interest rate increase? We just understand and look at the markets and what percentages we've got, and then we're guided by the macro. So that was a little bit off topic, but that's just one way of building a trade within an actual range, within a trading pattern, and you can trade into a profit before you've even got the breakout. That's Polkadot. Did you want me to look at anything else? Have we got any requests?
If anybody's got any requests in the chat, that'd be great. On my own, on my own, I like Atom. I don't know if you have Coinbase available and the Coinbase earned, but here in the United States, I'm able to buy Atom token, stake it right through Coinbase for about a 14% ROI, in more Atom tokens. So I love, if I got 100 Atoms sitting there, it's going to turn into 114 with compounding slightly more. And, I'm making 14% on a token that I believe is going to do, pretty well in the upcoming months and years. But I also like to leverage trade Atom. So I'm just kind of curious what your thoughts are. Right now, it's sitting all the way down at 62nd on CoinMarketCap, and it's all the way beaten down into the $4.50 range. That normally would look like an opportunity to me.
Yeah. Checking the fibs. Okay. Let's do the retracement instead. Yeah, it's an interesting one as far as the interest is concerned. There's a couple of things. Polkadot, you tend to get high interest as well. One thing that is good to look at is what their supply is and whether they've got a limited supply or how much is in circulation. I think that with certain things, and Cosmos is one of them, they do tend to put a lot more in supply as well, and that's one of the reasons why they can benefit from a high interest rate and pay more tokens. So it's got swings and roundabouts, but I completely agree. It works out in a bull run if you can cash out of something like that once you've accumulated something that's already in the account anyway. Then yeah, it's a powerful tool, isn't it? Right. Okay. So let's look at this range here. So you've got this range here. This is the important level here. This is the important level. That is $6.22. So that's the important level. Once you break above there, you're bullish. This is what we call a pothole effect. You've got support, support, support. This is what you were talking about earlier, Brad. Takes out the liquidations, and what this actually does is takes out the stop losses, and then it creates a surge to the upside. Once all these people are being stopped out, you get a volatile surge, double bottom, create this level of support, and then you get the push. We've come back down and we're reclaiming this area again now. So we've got another important level that we can add in there, which is here. All we're doing is joining the dots here, Brad. You've got 1 touches, you've got 2 touches, you've got 3 touches, you've got 4 touches, you've got 5 touches. Simple as that. We're joining the dots. Where's the next range? If the viewers, let me ask the viewers a question. Where would you think that the top support level is here? If you could look at that, I don't know if you can zoom into the chart here. Let me have a zoom in. Where do you think that the next resistance point is going to be on here? Paul or anyone? Can you see, Brad?
Yeah, I can see.
I mean, what do you think? It's something that I should do more collectively with the community, because it's interesting to get other people's views. And sometimes I even change my bias when someone points something out to me. And it's really interesting to just understand and just point out and help people collectively know that they can do this.
it looks like on the chart it's somewhere in the ballpark of around $5.50, $5.60 is where it seems to kind of be peaking and then heading back down. So my guess is somewhere in that $5.50 range is the next point of resistance. Is that anywhere close?
Exactly that, mate. Exactly that. And I bet everybody in the community as well that we're watching could see that. Can't see the price. Sorry, Paul. So I know you would have got that anyway, mate. So you can see this is the biggest sticking point, isn't it, Brad? And this is exactly the range that you mentioned. It is clear to people, but people haven't got the confidence to be able to do that and just understand, just break it down within a small amount of time, within a range that's lasted 207 days. That's a long range. It's been respected. What's the downside? What's the upside? Got 40% there, just on spot. 40% to the upside on a range that's been hit plenty of times before. Could even increase this here. More sticking points. There's been more sticking points. Understanding that you've decreased your percentage to the upside, but it's happened more times. Rinse and repeat, rinse and repeat. But everybody that was looking at the screen there could probably see that that was a resistance point. And it doesn't take a genius to work out that it's a resistance point, because you can see how price reacts to it. And what I want to do is give people the confidence to understand that when you were looking at that and you were saying you think that that might have been a resistance point, but you're a little bit shy to shout out, you were completely right. Pat yourself on the back. It was a resistance point. That's where we'd expect to get a reaction from. So until we break above that level that you mentioned, Brad, $5.33, around that area, then still in the range. One good thing about this, we had a golden cross. Got your golden cross there. Golden cross is when the 200 crosses below the 50 period moving average. When we get a golden cross and you hold above the golden cross, that's a retail signal. Now, one thing that you can see here that's quite interesting. What do we do with the 200 moving average? We use it as support or resistance. This come through, didn't act as support. We've fallen through, and now look at the battle between the bulls and the bears. Now look where they're fighting. Within this one day, there's a lot going on there. That candle tells a story. The bulls have pushed price all the way up to there, coincidentally, 20 in the 50 period moving average. The bears have pushed price all the way back down, and the bulls are trying to fight and break the 200 moving average. But even though that's a green candle, the bears are winning. Bears are winning. So that's a bearish bullish candle. That's where you need to break and close above on the day, $4.48. To get above the range, like you say, about the $5.33. I don't like, I mean, we've barely brought the indicators up today. One thing that I'd said is,
we had a quick question. Are you looking at the daily, the weekly? What is your chart set to right now?
This is the daily chart. Apologies, everyone. I tend to use the daily chart. Otherwise, I'll let you know. If I go into the 4 hour, I'll let you know. But otherwise, just expect it to be the daily chart.
Okay.
Yep, that was it from me, from that one. Is there any other requests? Was there any requests?
Paul asked to have you take a quick look at Jasmine.
Yes. This is like literally one of the community favorites. I've got a strong Jasmine community, a strong Cardano community. We're getting quite a strong following of quite a few different tokens coming into the Discord group now. So this is something that I cover quite a lot. This is something that my community is quite heavily invested in. Yeah, you've dropped the 200 daily moving average. So this is quite positive before. This is what I was talking about. And I said this was the area we need to hold. And this was the area that we should have held, which was 0.01517. This is the area that we didn't hold. And this is the area we fell through. What was previous support, we expect to act as resistance. So it gives us a clear area, Paul, in the short term where we need to break above, which is 0.01567 level. But ultimately, we can probably stick a trend line on here as well and just wait for a breakout, wait for a breakout. When you get the breakout, you're taking out all of these 3 moving averages. But in the short term, mate, I was bullish back here. In the short term, I'm a little bit more bearish until we can get above these moving averages and reclaim this area here, which was the lower high. That's what I'm looking for on Jasmine. I mean, from a projection perspective, mate, let me just stick this on. Just for this swing, this is just this swing back down. If you've got a 1272 extension, which is what I like to expect as a minimum, all the way at 0.02735. That coincides with, it looks like a big strong number there, the 382. So it's the 382 of this move here. So you've got double confluence there, expected to be a 1272, expected to be a 382 reaction. You've got this previous build up of price action where coincidentally that was support, that was support. That's going to be resistance. So see how all these numbers tie up. It might be the 1272, it might be the 382 retracement, it might be the previous resistance to support. As far as price is concerned, it's the same level. That's when you get a reaction from there. So that's what I'll be looking for once we've broken the moving averages, Paul, on that one.
Okay. Beautiful. What about you, Keith? Do you have any tokens that are on your radar? Anything that you're really keeping a close eye on?
Yeah, I've been doing Aluvium quite a lot because I like this area, and we actually did drop this area and we've come back and that's being met by buy orders. So you can tell that the buyers are actually here. Although we dropped a key level of support, we had so many different areas of support to fall back on. We've got this area here, so that's the resistance point which flipped support, and you can actually go all the way down here, $12.40 for this area of support, because once you take out that low, well, it's probably this low now, so you go all the way down here. Where is that? $11.83. So I mean, all the way from where price action is now, all the way down to the $12 mark is a good area for me. I know there's going to be strong buy zones there, and we did drop the 78.6, but we did get such a huge swing, and we did get negative downside. So you expect these high risk ones, Aluvium, it's quite a low cap. Expect them to get hit hard, but the recovery tells me a big story. I'd say between 14.58 and 15.13 on this one. And where are we now? 14.75, so just above the 14.58. But once you get a break, probably going to get a bit of a reaction here at 16.82. But above there, then I think that's going to be a big swing to the upside, and I'm expecting a continuation on that.
I love it. Well, guys, I got a live stream at 11 o'clock, which is about 45 minutes from now. So we're going to hop off of here in a minute or two. But I do want to give you guys just a couple of, updates here real quick. So I'm going to pop over here and swing over here to my screen. I'm just switching a couple of things up. But I want to let you guys know that we have a new, that's not where I wanted to go, here we go. That we have a new exchange that we've been using over the last week or so. I only did one trade on here, but it was pretty awesome here. I did a 25x leverage long on Ethereum that popped up. I opened this trade several days back. I closed it out a couple of days ago before this dip, but I was managed to get in on this 25x leverage trade at 4,300 for Ethereum, and I closed it out at about 4,750 bucks. And made $1,290. And I want to give a big shout out to BITUNIX, because they actually gave me 500 bucks to trade with. So the $500 that I put into this trade was provided by BITUNIX. I appreciate them. They're another exchange that doesn't require any KYC. They love us United States citizens. And so I'm going to throw their branding up there real quick. And then, guys, I'm going to throw their link into the comments here. For those of you that are watching and that want to support the channel, one of the easiest ways that you can support the channel is by going and creating a BITUNIX account. It's totally free. Just use your email and a password, and you will have an account. And what I'm going to do, I'm going to do a special bonus. I'm going to give away $100 of this USDT that I won I'm going to draw a winner. So the first 10 of you that use this code that I just put here in the chat, or I just updated, in fact, I need to save this. I think I did save it, but I put it right here. Join our newest partner now, and let me double check that I did this correct. It should be correct inside this, inside here. Now let's go to view on YouTube and then turn it off. You don't have to listen to me twice, but yeah, it's right here at the top of the exchange too. So this is going to show me the first 10 of you that use this link and create an account with BITUNIX. I'm going to do a random number generator. So the first person that signs up is going to be number 1. The 10th person that signs up is going to be number 10. I'm going to do a random number generator, and whichever one of you 10 people gets lucky enough and wins is going to get $100 in USDT to your BITUNIX account that you can use to buy a token. You can trade with it, whatever you want to do. They're also doing some pretty cool promotions, and we're going to be having a trading contest for my community and for those of you that join through this link. So let's show them some love. This is the first day that that we have talked about them since I got in touch with them and created this partnership with them. So it would mean the world to me if a few of you would join up and grab accounts so that they can see that you guys actually are like glad that we are partnered up with these guys. And then second, and not last but not least by a long shot, but here in 45 minutes, I'm going to be interviewing the team from Tansy token, TANSSI. You can find it here on CoinGecko. It is a microcap gem with about a $10 million market cap, if I remember correctly. And they've been nice enough. Yeah, we're sitting at a little over 8, going on 9 million, fully diluted 40 million. But they have been nice enough to donate $100 worth of Tansy tokens that we're going to give away on that live stream. So if you are able to hop on the live stream here in just under 45 minutes, 43 minutes now, that would mean the world to me. We're going to do a $100 giveaway, towards the end of that live stream. And, other than that, I don't think I've got anything else that I wanted to mention. Keith, did you any last minute things that you would like to mention? Oh, and here's the link to that video. If you want to click that link and get yourself, just have it pulled up so that it's ready to go for you. That link will take you right to this video here.
That looks like an interesting one, Brad. Yeah, no, just from me, just to give edge people caution, and just understand exactly this is what the market does. It does hurt people. People get into different stages of the market, and I just want to say now's not the time to start panicking. Now is not the time to have disbelief. We've been through that kind of phase, haven't we, Brad, over the last 2 or 3 years, and we're getting this bit of a downside on Bitcoin, and it does hurt. And until the charts tell me different, I'm not getting worried. So, I mean, none of it's financial advice, but I've been watching these charts for years and years and years. And if I was looking at this chart 3 years ago, I'd be getting a lot more excited than what I am now. And that's because I'm emotionally involved in there. So if the chart's playing out, the charts are telling a story. Collectively, they're painting a picture. And yeah, we're going to get up days. You're going to get bad days. When the bad days are bad, the bad days can be really bad. And even in 2021, we had the 50% crash, didn't we, with Bitcoin? And that was about 78% on altcoins. And then we had the altcoin recovery in leg 2. That was hard. That was hard on a lot of people. And that was my first real big crash. But before that, you had your 20, 30% Bitcoin crashes, your 40% altcoin crashes. So just understand and try not to panic too much that it can hurt. But then it can recover a lot quicker than what it hurts. The downside is a grind. The upside is very quick. So it's all about preparing during the downside and reaping the rewards during the upside.
Awesome, man. I appreciate that. And then like that infomercial that happens at 3 in the morning, but wait, there's more. I just remembered one other thing that I want to mention to everybody here real fast. And that is the Infinite Agape token has some incredible momentum. So probably everybody watching this knows that I'm one of the co-founders of this project. I'm pretty proud of it. But recently, over the last couple of weeks, we've had some new people join in and become part of the community that are massive inside of the cryptocurrency space. And so we've watched the price have a nice price increase to the upside. And I just wanted to let everybody know, do not forget to nominate and vote. So right now we've got our nomination and voting round is open. We've got 3 nominations right now. This goes till the 23rd. Wait a minute. That can't, excuse me, the 27th. So on the 27th at roughly 1:25 in the afternoon, my time, Pacific Standard Time, the nomination period will be over. So we've got, today's the 26th. We've got roughly 3 days to nominate tokens. So if you have enough tokens, $777 worth of tokens, make sure you get your nominations in on the 27th at 1:25 p.m. You'll be able to see all of the tokens that were nominated. And if you own $77 worth of tokens, you'll be able to vote for the token that you would like to see win. The person that nominates the winning token gets $500. And then the people that vote for the winning token have been getting anywhere from $25 all the way up to as much as $97 in an airdrop. So go ahead and take a closer look at this. I'm really excited for what we're doing here. And I just wanted to remind everybody to don't forget to vote the 27th through the 29th. I know that we got a lot of voters watching today's show, and there's probably a couple of people that are nominators too. Greg Nowak, I know he's got enough, he's holding enough to nominate, and there's a few people on here that are probably nominating. So I just wanted to mention that real quick before we head out of here. With that, I'm going to hop off, grab a quick little bite to eat, walk my dogs, and get ready for this interview here at 11 a.m. So about 40 minutes from now. So thank you all for being here. God bless you. Look forward to seeing you in about 40 minutes. Have a great day.
Thanks, guys. I'm just about to drop the anchor, and I'll be with you shortly. Bye now.
Awesome, man. Thanks for being here, Keith. Take care.
Bye.